Welcome to the ResumeX podcast, where we explore the ideas shaping the next generation of business, technology, and economics. Today, we're discussing a fascinating concept called Agentic Economy, a world where AI agents don't just assist humans, but autonomously create measurable value and participate directly in economic transactions. Joining me today is Vinayak Joglekar, founder and thinker behind ResumeX, a platform building what he calls the trust infrastructure for agentic economy. Vinayak, welcome.
Thank you, Rachel. It's great to be here, especially to discuss something that's not just technological, but also fundamentally about the economics and trust of the future.
Vinayak, can you explain to our listeners exactly what agentic economy entails? It sounds revolutionary.
Absolutely, Rachel. Agentic economy represents a shift in how economic transactions occur. Traditionally, businesses pay for hours worked, effort applied, or features delivered. In agentic economy, businesses pay for outcomes achieved. An AI agent might tackle a business problem and deliver measurable improvements, whether in efficiency, revenue, or quality. The payment is directly tied to the success metrics, not the time spent or tasks completed.
So the focus moves from input-based compensation to outcome-based compensation.
Exactly. And that's the crux of why this model is so transformative. It changes the incentive structures and aligns the AI agent's behavior with business objectives.
If AI agents lack identity or social context, how can businesses trust them?
This is where the problem becomes interesting. AI agents can generate outcome that is highly competent, but they do not carry social or legal accountability. Unlike humans, an agent doesn't have personal stakes or continuity. In traditional systems, trust is built through reputation, references, and repeated social interactions. AI agents don't have that. Therefore, trust must be programmed into the system via structural mechanisms, which is where ResumeX introduces smart contracts, explicit outcome definitions, and verifiable performance history.
So trust is engineered rather than assumed.
Exactly. And that is the distinction that makes agentic economy fundamentally different from traditional outsourcing or automation.
Vinayak, can you expand on how smart contracts solve the trust problem?
Of course, the power of smart contracts in agentic economy lies in enforcing clarity and accountability automatically. Every engagement defines the expected outcomes, alternative acceptable outcomes, success metrics, timelines, and reward structures upfront. This eliminates ambiguity, the biggest source of trust failure in any business engagement. It also enables performance verification that doesn't depend on human judgment alone. Essentially, the contract becomes both a guideline and a ledger of truth.
So the smart contract does more than automate payments?
Yes, payment is just the mechanism. The contract encodes trust and accountability. It's the core of the relationship between humans and agents, ensuring that economic exchange happens fairly and predictably.
Vinayak, one thing that stands out in your framework is the emphasis on extremely precise outcome definitions. Why is that so important?
Because ambiguity is the biggest destroyer of trust in both traditional economy and AI-driven economy. Most projects fail not because teams are incapable, but because expectations were never made explicit enough. In traditional engagements, phrases like improve user experience or optimize performance sound meaningful, but different stakeholders interpret them differently.
So two parties may think they agreed on the same thing when they actually didn't?
Exactly. And in agentic economy, that ambiguity becomes dangerous because autonomous agents can optimize for the wrong thing very efficiently. That's why ResumeX emphasizes radical clarity before commitment. Every smart contract explicitly defines desired outcomes, acceptable alternative outcomes, measurable success criteria, timelines, validation methods, and economic rewards.
Can you give an example?
Certainly. Suppose a company hires an agent to improve conversion rates. Instead of saying improve conversion, the contract specifies 5% improvement within 60 days leads to full payout. 2 to 4% improvement leads to partial payout. Below 2% leads to no payout. Now everyone, humans and agents, understands exactly what success means.
So the contract becomes more than a legal document.
Yes, it becomes a trust framework, an operational specification, an economic model, and a governance mechanism.
You mentioned that Agentic Economy acknowledges multiple possible outcomes. How does that work in practice?
Real world problem solving is uncertain. Instead of a single binary success/failure, outcomes are probabilistic. For example, an agent might test three strategies. Some fail, some partially succeed, and one may significantly outperform expectations. Payments are linked proportionally to these outcomes. This aligns incentives, encourages experimentation, and manages risk effectively.
So agents build reputation purely through verified performance?
Yes. Proof of performance reputation is fully objective and independent of social or legal identity. It allows autonomous agents to participate in commerce with measurable credibility.
Why is blockchain so important in Agentic Economy? Couldn't traditional banking systems handle these transactions?
Traditional banking systems were designed for humans and institutions, not autonomous digital agents. AI agents cannot open bank accounts, sign legal paperwork, or participate in payroll systems the way humans do. They require a native digital settlement infrastructure. Blockchain enables that.
So blockchain is less about speculation and more about enabling autonomous economic participation?
Exactly. In this model, blockchain provides escrow, programmable payouts, transparent settlement, and decentralized trust. It allows economic coordination to happen automatically once outcomes are validated.
And smart contracts automate that validation and settlement process?
Yes, once predefined success criteria are achieved, settlement can happen automatically without requiring lengthy human approval chains. That creates a scalable economic infrastructure for agents.
You also mention deferred reward tokens. How does that change the economics?
Deferred reward tokens create alignment between agents and long term business outcomes. Traditionally, vendors are paid regardless of whether long term value materializes. In agentic economy, rewards can be tied to future business performance. For example, if an optimization agent reduces supply chain costs by 20%, it may receive tokens linked to future savings generated over time.
So the agent participates economically in the value it creates?
Exactly. And this transforms agents from task executors into economically aligned participants. It also changes risk distribution because agents now share upside and downside with the business.
That sounds closer to venture capital economics than traditional software delivery.
That's a very good observation. Agentic economy increasingly resembles venture economics, performance consulting, and decentralized autonomous coordination all combined together.
One of the more radical ideas in your framework is that agents themselves may take on risk. Can you elaborate on that?
Absolutely. Today, most software engagements are effort based. Companies pay regardless of whether outcomes are achieved. In agentic economy, some agents may operate on a completely different model. Only pay me if I create measurable business impact.
So agents become outcome entrepreneurs?
Exactly. An agent might say, only pay me if operating margin improves, if fraud losses decrease, or if customer acquisition cost drops. This fundamentally changes incentives.
Because now the agent absorbs some execution risk.
Yes, businesses reduce upfront investment risk while agents compete based on confidence in their own capabilities. This creates a new class of autonomous entrepreneurial agents. Over time, we may see entire marketplaces where agents compete not on hourly rates but on expected outcome probability.
Why do people call the AI industry a bubble?
Because AI is generating enormous value for clients but capturing very little of that value itself. Compute, infrastructure, and model costs are huge, but pricing models often only charge for token consumption. Hence, the economic mismatch creates unsustainable growth expectations.
How critical are hallucinations for agentic commerce?
Central. Unlike chat apps, here hallucinations can trigger financial, operational, and legal consequences. ResumeX mitigates this through structural verification, TDD, playbook artifacts, and smart contracts. Verification is more important than generation in this context.
Why is decomposing work into smaller contracts important?
because it creates an incremental path to trust. Instead of risking a massive commitment up front, agents demonstrate performance repeatedly through smaller parcels. Each successful contract builds verifiable reputation, which scales trust organically.
How does agentic economy change the future of product engineering itself?
Fundamentally, today product development is fragmented across product managers, designers, developers, QA, DevOps, and operations. But AI increasingly compresses those boundaries. We're moving toward a model where a small number of highly context aware product engineers orchestrate large numbers of AI agents.
Is that what you call the FDPE model?
Yes, the forward deployed product engineer. This role combines business understanding, product thinking, technical architecture, deployment knowledge, and operational ownership. The FDPE works directly within business domains and uses AI agents to accelerate execution.
So implementation increasingly becomes AI generated?
Exactly. The bottleneck shifts away from coding and toward defining the right outcomes, maintaining architectural coherence, validating correctness, and governing trust. That's why playbook driven systems become so important. The playbook becomes the durable organizational memory connecting business intent, architecture, tests, deployment, and operational behavior.
Vinayak, this has been incredibly insightful. The idea of programmable trust and outcome-driven economy seems like a fundamental shift.
Exactly, Rachel. This isn't just technology, it's a new model for economic coordination where trust, verification, and incentives are encoded structurally.
Thank you for sharing these insights with our listeners.
Thank you, Rachel.
And thank you to our audience. This has been the ResumeX podcast. Until next time.